Hello, everybody. It's another sucky day in the markets out there. A lot to talk about. The big question in my mind is, why is this happening? And here comes Mr. Mando. Good morning, good afternoon, good evening, wherever you are in the world. Markets are crap again. This story today is called Another Coordinated Attack. And we'll try and figure out, is it a coordinated attack? Is TradFi going after crypto? Or is it just the reversal of the Japan carry trade? They're the three big questions we'll try to answer today. We'll talk about other stuff that's happening with safety cushions and some other macro stories out there. But before we jump in, let's go around the horn. Let's start with Marty first because he was flying all night. Marty, you alive?
Yeah, I'm here, guys. Took the radar back from the East Coast for Thanksgiving. I'm here. Obviously, it's a pretty tragic day for anybody on the markets. It's a big flush, back down, double bottom, slightly higher low so far, 83,995 coming down, flushing the last positions. I think the end is close. But yeah, it's pretty tragic for everyone. ETH is at 27.21 right now. Nice to see you all. Everything's good. Hope you had a good Thanksgiving.
AI exposure is good. ALAB, BABA, NVIDIA, STM, all those things are going up as well. So it's more crypto is a disaster zone and has been for a while. CTO, it's dark again. What's going on?
Yeah, it's dark again. I'm not sure I understand the Japan situation fully. So I'm curious actually to learn more. First, I thought it was the closer of the candle because it dumped literally at 0000 UTC time. So first I thought, okay, monthly candle closed bad. So there's people who reduce exposure based on that closed candle, but perhaps it was coincidence with the Japan situation. So yeah, I'm curious to understand more about that. And that's...
We'll dig into that, and we have Mando as well. Mando, another kick in the teeth today. Not as bad as 10 days ago, but still bad.
Maybe. This day's not over yet. I think there's a good chance we go below 80K. I do this week. Yeah. I don't think the market looks that healthy to me. I think you just got to be realistic about where we're at. Like it feels as though crypto is selling off kind of independent to a large, and you just got to respect the market when it does this sort of stuff. So we had that bounce, didn't really hold it, and now I think there's a very good chance we at least test the last low just to see if that's going to be a bottom. I think we kind of said that maybe last week or 2 weeks ago, but now it's if we hold that, will be the main thing.
We'll dig into that actually because that's part of the agenda, the AKA the double bottom story, because that can be a very bullish sign. So let's jump into the story and then we'll jump into the charts and try to get through a lot of material. So this one is called Another Coordinated Attack. Last night, almost like clockwork, as CTO said at the beginning of the monthly open, it's a quiet Sunday night. CTO is fast asleep in bed. A lot of the Eastern United States is also asleep. I am awake and I'm saying, oh my goodness, this is horrific. And Marty's in a plane. Amanda, you're probably asleep as well. Wintermute, dump, nearly 9,000 Bitcoin, Coinbase.
I've got the numbers. I've got the numbers here.
Yeah,
1,738 Bitcoin.
No, it's higher than that, the numbers. So we got Wintermute 9,300, Coinbase 8,400, etc., etc. But they all did it at the same time. Now the question is, Marty, for you, was this a retail dumpage, or was this cascading liquidations, or is this orchestrated? Because you can see the tip of the spear is Wintermute, and that tells me it's orchestrated.
The only semblance of reality is that I tracked the pullbacks, and the number was 87,242 at the bottom of the range to clear the range of all long positions, over leveraged longs, and that's exactly where it came to. But it's a self-fulfilling prophecy, like I said last week. Once the price starts coming down and is manipulated down, then everyone panic sells. More long, there's cascades and liquidations and stuff, so it can go lower. But yesterday, the whole day, we were watching them send assets to Wintermute. I mean, all assets. It was like you said, a coordinated thing from all over. Coinbase, Bullish, Kraken, OKX, they were all sending to Wintermute. I mean, I saw 521,000 Sol sent to Wintermute, 41,000 ETH, Your number is way higher, but I had around 1,700 BTC, all prepared, and at exactly 0000 UTC, they took out the entire range. So it seemed very coordinated. It's also very interesting that today is the official end of quantitative tightening. In other words, they're ending the balance sheet runoff at the Fed. So they've burned, basically, if you want to put it in crypto terms, they've burned all the dollars that they printed. And, here we are. It happened on that day. Do you think that's a coincidence? I don't think so. I think it's a full-scale crypto reset. We came down to that 87,000 double bottom. We've got a slightly higher low right now. We'll see if it holds. But, this is actually pretty normal. I know it's scary to understand that.
Yeah.
But all it explains is how powerful these exchanges are, how powerful the derivative market is, the perpetual futures market. And, without some kind of regulation, this is just going to continue.
Exactly.
So, yep.
It's definitely nasty out there. And I know that people are losing faith big time. Mando, do you believe in orchestrated attacks? Because I'd like to double down on that belief and talk about beyond just crypto, but also TradFi going after crypto. There's like everybody has their daggers out. How do you view the macro here regarding everybody trying to take crypto down because they're afraid of it all of a sudden? This is like a choke point 3.0 almost.
Yeah, look, I think about 6 weeks ago, there were a range of different things that could have been the reason why we were selling off. We had the AI trade looking like it was a little bit weaker, and a lot of stocks started to roll over at that stage. We had some people talking about privacy and that, Bitcoin was too institutional and that people were going to move towards Zcash. We had some light flood around like quantum resistance. We had stuff which has been with us for a while, like the Japan carry trade. And then we had like the DATs and maybe some form of a coordinated sell-off. The majority of those are now not still true, I would say. So with regard to the M2 global liquidity trade, like gold, silver keeps on hitting all-time highs, like that trade is still alive and well. The AI trade largely seemed like a shift from NVIDIA to Google, and stocks have actually performed okay. Japan carry trade is continuing, but Japan has never been a huge... it has some impact on crypto, but it shouldn't have an impact on crypto in isolation like it seems to be. So I think the two strongest reasons left are the DAT trade and some sort of coordinated sell-off trade, which could be like the 4-year cycle as well, kind of together. Like, why is everyone selling at the same time? I think the attack on crypto, I think there's no doubt in my mind that distressed and high yield hedge funds are aware of MicroStrategy right now, and some of the other DATs. Like the bonds are trading in the 80s and 70s, and so I think, and generally when that happens, people look for like pain points. So this could be like a big test of the DAT trade, just to see what everyone does on a move like this. That's now my strongest thesis about what maybe is happening here. Like there were some headlines or like an interview with the strategy CEO last week, which was, hey, we may sell if MNAV goes below 1. We still would sell potentially. So maybe there's a test of if they're going to do that alongside Bitmine, alongside all these other big holders of other L1 tokens, which has happened. Now, Strategy has come out and said this, which does cover their interest payments, I think, for like the next 2 years almost, or just shy of that. But I think you could say the coordinated aspect of it could be a coordinated test of this DAT trade, which may still be happening. And, there are other vehicles across ETH and other L1s which used a mixture of credit equity lines, which I think could potentially being tested here. And then the other thing is it may be more sinister stuff, which kind of Marty, I think, has been hinting at, like maybe there is a more coordinated attempt to get crypto at lower levels, either to accumulate it, or maybe it's more like a sovereign move by China or something along those lines. That I just don't know. But it's either that or the DAT trade right now, because there's not much in macro, I think, which points to crypto in isolation selling off.
Yeah, to me, I mean, man, I think it's an excellent summary, Mando. But to me, the interesting numbers are just how much sheer volume of liquidity that's been extracted, right? We had another almost $1 billion. We've had roughly, I would say, $100 billion in the last 3 weeks extracted from retail. You guys hear me?
Yeah, I mean, the perp trade, you're muted actually, James, but the perp trade leading to huge fees is something that's been added this cycle, I think, more than others.
Yes, 100%. That's what's new. Exactly.
So let's cover this one off first, because a lot of people are confused about what's happening. And I'm glad Mando pointed out that MicroStrategy is a key linchpin to a lot of what's going on right now. They did put in a safety cushion, so they could basically say to the market, there's no need to freak out about us. We love Bitcoin. We're not crazy. We're preparing for rainy days. We will not be forced to sell any Bitcoin, no matter how low it crashes, unless it goes down to $15,000, which is the bottom of the bear last time around. That's the math that they've engineered right now. And maybe this is in retaliation to what you mentioned, Mando, about the CFO or the CEO saying something that rattled the markets. But this removes one of the biggest fears out there for this DAT. Okay, Wall Street do not like what he has done. He has engineered a new way of creating credit instruments, and that makes them very nervous. They like to control their own game. All of a sudden, this outsider is controlling it. And the other thing that's important is Saylor's close to the administration, and so are many of the DATs out there. Even the family is exposed. So, you know, JP Morgan debanking some of the family members, going after the DATs, and the administration being pro-Bitcoin. I see a big fight coming down the line. And this takes us to this. Now, we had a situation where TradFi was going after Jack Mallers, Tether, MicroStrategy, Michael Saylor, and now they're going after David Sachs and other Trump crypto advisors. Because the big banks are scared that Bitcoin and stablecoins could take away their power to control money. That, I think, is the big picture. You know, with the Genius Act and the Clarity Act, could lead private companies to create digital dollars and blockchains instead of the money center banks issuing the money. And that's the big difference. For a lot of people that don't understand, is the government works with 5 huge banks in the US and they issued the money. And that's their gravy train. If you take that away, they lose a lot of potential. That's kind of the big story.
The only question, James, is how do the banks get people to sell? How do the banks drop the price? How do they actually technically devalue crypto?
Well, that's the piece I can't put my finger on, but I'm most sure there's some type of collusion between Morgan Stanley and JP Morgan around cutting off the margin requirements and threatening to remove DATs from indexes from NCSI.
So they create fear. So they create a FUD campaign. Your theory is it's a FUD campaign.
Yeah, there's too many breadcrumbs out there. And we've seen this before. You know, these markets, these big banks like to control markets and orchestrate them. But let's get back to a little bit of good news, and then we get back to some of the bad news.
Should I show a chart also, see a little bit what, because I noted one other thing that's perhaps potentially interesting. So we had this level here where price, because there was like buying interest down here. We talked about it last week, and price did pump quite a bit above that, but then it was kind of rejected here, and this is not a new level. This was the level that was set here a year ago, basically.
Yeah, it's quite normal, actually.
Yeah, exactly. And it did reject there. So, I mean, perhaps, some people for sure got a little bit worried that it couldn't break through the first key support resistance after the retracement. It's not good if it's rejected on the bounce. So perhaps people was worried, but I felt that I usually don't look like at 5-minute chart or 1-minute chart, but this dump literally happened exactly at 0000 UTC on the 1st of December, like exactly when the last monthly candle closed, and that seemed not a coincidence somehow.
Yeah, and I mean, I can imagine at night they're all on the phone together. Okay, guys, you ready? You ready to press the button? Wintermute, you ready? Yep, I'm in. BitMEX, ready? Coinbase, okay, ready? Boom, boom, boom. Like literally, people think these are wacky theories, but they don't understand how markets work, how finance works, how the big power players pull the strings. And maybe, Mando, could you add to what CTO said? We've got that pitch perfect timing. Is that just a coincidence? I don't believe in coincidences.
Well, I would say it also corresponds with the monthly.
Yeah.
That was a big level for a weekly, monthly, and daily close. So you do get a lot of CTAs and algorithmic funds which will sell after certain levels after a monthly or weekly close. So look, I think we can opine on whether this is coordinated or not, but it doesn't necessarily matter.
Yeah. Markets are markets.
Like right now, the price is going lower, and I think what CTO's analysis shows there is kind of, if I'm game planning right now, it doesn't matter who is really the seller. If it is BlackRock and it's China and it's this or the other, like at the moment, that is they're having a very strong impact on price, far more than any of the other fundamental drivers that have been with Bitcoin for a long time. So you have to respect it. To say that is necessarily like, oh, there's no at the moment, if that is the main driver, there's no sign of that being diminished. So that's why I think, if anything, I'd be extra cautious. Because if any of the other fundamental things turn as well, let's say we do get a sell-off in stocks, I think that would worry me even more. So right now, it's like we're doing this with everything else that I just spoke about actually having reversed in the last 6 months. Gold, silver hitting close to all-time highs again. Stocks having a good week. The Zcash is trading at 350. Like, I don't think many people are talking about privacy again as the reason why Bitcoin might be selling off. So you really just have this smoke and mirrors answers, or the DAT trade being questioned, and that one is slightly more worrying than the others, if I'm honest.
Yeah. Also,
I mean, definitely there's a liquidity crisis. We know that we've run out of liquidity. Literally, this all happened exactly on the day of the end of quantitative tightening. 0.000 UTC. So I think those are the most interesting things. Also, Bitcoin is, the fastest liquidity. That's the canary in the coal mine. I think it's showing us that, the situation is worse than we think. I think the stock market is being propped up. I don't believe it's true that it's at all-time high right now. And so we'll have to see. But at the end of the day, I think CTO is right. Technically, if you look at the chart, this is relatively normal. A 35% pullback, a short dead cat bounce, a retest, double low, slightly higher low. And everyone's in tether. There's almost 7% tether domination right now. So everyone's stabled up, basically thinking it's a bear market. They'll all come back in. The money's not going away. It's just not being entered again. I think the biggest coincidence indicator is that the exact bottom of the range of Binance's long order book for 25Xs was exactly where we hit. Now, I don't care about JP Morgan, conspiracies, MicroStrategy. It's not going to go to exactly the exact dollar of the bottom of Binance's order book. That's not how it works. I think the more evidence is that they basically accumulated more assets than I've ever seen to market makers and coordinated a dump to clear the book. To me, that's the only thing that has actual evidence. Everything else is a narrative with no evidence. So that's my opinion. I chase evidence, facts, numbers.
Well, let's look at the macro. We touched on that a couple of times. We have Tom Lee. Literally, he was on CSNBS or whatever they call it an hour ago, maybe not even. And he mentioned a couple of things. Now, we do know, before we talk about what he mentioned, we have an 88% chance of a rate cut in 9 days. Big. QT ended today. Money will flush the market. There's a thing called a TG&A account, which basically ran dry during the government close. That now has $1 trillion sitting in it, which will be spent. Okay, so everything I look at in terms of money and macro, it's looking pretty strong. Tom Lee, he said words to the effect of QT is ending. More money will come into the system. The Fed has stopped draining liquidity, and liquidity is the big problem. He said, I don't know if he said this exactly, but we know Bitcoin, and it is a liquidity indicator as well. And they said the Bitcoin dip was leverage blowing up. and he has some theories on exactly what happened. The rate cuts I mentioned, they're coming. That's going to be big. And he still believes in, and I know it's a bit of a hopium hit, but he moved his $200,000 target out from end of December to end of January, which was, it's still very optimistic. I promised I'd eat a shoe live if that does happen. But we also, sometimes there's a thing called concept called window dressing that happens at year end. CTO and Mando, I don't know if you've seen that as well before, but people like to be in positions before a new year begins in their portfolios. If they have sold out of Bitcoin, it's nice to have a little 2%, 4% allocation in a portfolio before the end of the year. I see you nodding, Mando, on that. Anything you'd like to add? Is Tom Lee smoking crack? By the way, his Bitmine company is $4 billion in the red. So,
yeah. So maybe to give a little bit of insight into what I, having been in these sort of positions before, what I generally see with year-end trading is people catching falling knives happens slightly less because you don't normally get paid. Like you are normally, like, payments are normally decided like around this sort of time. So anything, that's why in December you often see volatile moves either way, because no one's really being paid to like take the other side of something. But you also get, people do set up trades for the next year. So often you get broad-based rallies in things like stocks around this sort of time, getting ready for like January. I don't know really what would be what people, if you looked at crypto right now, what you'd be doing. What it may mean is that people won't step in the way of a trade if it looks weak in December. They may do in January because that's where they'll start to get paid to do it. Or on more stable things, they might be trying to build a position for it. Like, I don't know which of those two things is going to be the stronger argument here. But the way that crypto is reacting makes me feel as though there's not a lot of liquidity right now, particularly in altcoins, and that makes me think that a lot of the liquid funds don't want to step in the way right now. This feels like a liquidity issue as well. Like maybe the market makers and the liquid funds after the 10th of October as well as don't really want to get in the way of like a sell-off. So
yeah. Now, he did not point at, and CTO, you asked a question regarding Japan. Japan looks hawkish. I don't recall him talking or referring to Japan, but we do have a situation in Japan, and people are trying to connect the tissue between, and I like to connect tissue, but I cannot see the connective tissue between the Japan 10-year bond and the Bitcoin sell-off because of the orchestration, even though the timing was kind of simple. But people are acting like the yen carry trade has suddenly blown up. But it's not something that blows up all of a sudden. It's a gradual thing over many, many months. The 10-year bond yields have risen all year, up 70% year to date. This is up 1,100% since the global financial crisis. Okay, Japan is not equipped to handle these high rates. They are a house of debt. So anyone heavily involved anyway in that trade, if they were, they saw this coming and they've been unwinding it over many months. That's the first part, CTO, for you. And anybody who has any input on this, let me know as well. I do not believe this has anything to do with the Bitcoin being hurt this year. I think it's all liquidity. Nothing to do with the yen carry trade. It's just another scary story aimed at scaring people out of Bitcoin. Any comments on this one?
I mean, my first bet was exactly what Mando said. Like, the weekly and monthly candle in Bitcoin closed really bad. And once it closes, that's where many big investors base the decision on. They don't kind of trade the intraday candle, and many don't even trade the intra-week or intra-month candle. They wait for the candle to close, and then they have like an algorithm. If it closes bad, okay, you reduce position. And that's why I guessed that it dumped exactly at 0000 UTC, because that's the candle definition in Bitcoin. But then I saw some people said that it was also timed with changes in the Japan macro market. Who was it who said it? Actually, it was
Arthur Hayes.
Arthur Hayes, right? Who zoomed in on the minute and said that there were changes in the USD to JPY currency rate and so on at that exact minute. But I don't know. I'm not a macro analyst, so I'm not sure.
Yeah, I can go into a bit more depth on this. Like, so generally, Japan had really low interest rates for a long time, very low interest rates. So the trade was, you borrow in yen, you convert that yen into dollars, and you buy assets in dollars. All right. So even if your interest rate in the US was 4 or 5%, you could borrow in yen at 0% or 0.5%, convert it into dollars, and buy dollar assets. What has happened is the interest rate in Japan has gone up to around 2% now, which is meaning that trade is less profitable and it's being unwound. Now that has been not a short-term thing. We've spoken about Japan like carry trade unwinding for a while. The worry is if this happens violently at some stage and then it breaks something. So the main things at risk here are things with high amounts of liabilities, things like who have also invested in dollars. So you might think of insurers in Japan, or like pension funds, that sort of stuff. They would be the most exposed to something like this, but we haven't really seen that. We've just seen unrealized losses on their balance sheet. In the long term, this should be super bullish for Bitcoin, because the only real solution to this, as we spoke about last week, is Japan's going to have to start printing a ton of money. Japan has about 300% debt to GDP ratio. If the interest rate goes up to 2%, they're going to have a similar situation to what there is in the US right now, where you have unbelievably high interest rate payments as well. So Japan's going to have to print its way out of this. There's no doubt in my mind they're going to have to do that. So the longer term impact of this breaking down and a higher yields in Japan, plus is a need to print JPY. So I don't think this is necessarily a bad for Bitcoin, unless something really broke, but that hasn't really happened.
And in fact, it's hard to believe, but we spoke about this, Mando. I don't know if it could be wrong here, but the last time the reverse carry trade happened, it was a mini gray swan and took the markets down. That was around August 2024. And you were on this channel. Have we been doing it that long?
This has been going on. Japan carry trade is this has been unwinding for a long time. Arthur Hayes has been writing articles about this for a long time. This breaking, if it was really breaking, it would be affecting all markets everywhere. It wouldn't just be a 1.5% drop in the Nikkei. It would be like 10%. Insurers are going down, banks are going down. We haven't seen that.
Exactly. Very good point. And the big macro point again, yet another feather in the cap. Money printing is going to continue globally at a rate of knots, faster than ever before. And rates have to come down. Jerome Powell hates Trump with all of his heart. He doesn't want to reduce rates, but he knows, because he sees the labor market cracking violently despite not having any data. He just needs to look at the ADP payroll company reports. It's shocking out there. So good stuff. CTO, does that answer your question regarding Japan and the carry trade reversal? Because that's one thing you're interested in.
Yeah, I also was kind of curious. Okay, why doesn't it affect any other asset? That's why I felt that was more the candle closed bad, and that's it.
And let's revisit correlations, because correlation to global liquidity didn't work. Correlation to NASDAQ didn't work. Correlation to gold didn't work. What the hell's going on with correlations? This is Mert being responded to by Memely Alpha. Mert was joking. I can't remember what he said. He said, what's going on with digital gold 2.0? It's nuking when real gold is pumping. Or something like that. He said it's because gold has been treated like a high beta tech stock. Bitcoin has been treated like a high beta tech stock, sensitive to risk. But NASDAQ keeps going higher. Separate issue. Real gold is acting as a traditional hedge against geopolitical chaos and global de-dollarization. In fact, despite the rates spiking on the yen got stronger against the dollar, which impacts the Dixie. Dixie goes down, which is good for Bitcoin. Who wants to take a stab at this, Bitcoin versus gold? Will it ever catch up, or is just global chaos on the cards and nobody knows what to do with Bitcoin?
I mean, gold is a regulated market, but crypto is not. There's zero regulation. So that's, to me, the answer. If there was the same regulation as the gold markets, which are actually highly regulated, we wouldn't see this kind of behavior, this kind of volatility. I believe it's all artificial. That's my answer to that.
So I have a
So
chart as usual.
Yes.
I can show it a little bit because it's like different depending on what time frame we look at. If we look at the last couple of months, it's very, very clear here that so this is Bitcoin versus gold. It's trending down, and it kind of looked perhaps like there could be some hope here in mid-October. It bounced, but then that broke also. So this is definitely trending down here, as no one has missed. If we look at it from a longer multi-year perspective, it's a different picture. Then Bitcoin versus gold is bumping up many times against this resistance. It keeps getting rejected. It got rejected in April 2021, in October 2021, in November 2021, almost in March 2024, in December 2024, and now again mid this year. And then it kept turning down here. But if this breaks sometime, guys, we're not going to miss it. We're not going to sit here on the show and miss that this has finally broken out. And if it does, it's not that this can only go to 100%. No, of course,
I think that's ounces.
Limited upside.
It's ounces of gold per Bitcoin, isn't it? So the all-time high is like 42.
I think this is just showing the price. Actually, of course, we could measure it in different ways. The point is that it's the ratio in some way, and I think this is showing actually the price versus.
It's 40. The all-time high is like 42 ounces per Bitcoin. That's
but
where we need to break again.
So I think the thing to keep track of is this line here. Or rather this area, if it breaks, okay, then it's go time, guys. Then the digital gold is taking over. But it didn't happen this time. It rejected. So that's what we can see from this one.
Awesome. Now the next question, we kind of touched on it at the very beginning. A lot of people, including myself, like if Bitcoin did fall, heaven forbid, somebody's saying here 50K, that'd be a nice time to buy. I still believe the bottom could be that 70K. We basically hit 80 already. 10K is not a far stretch from 70,000. The big question is what situation are we in? And I think I have a slide on this just to set the stage. Are we in a bear market? I think it's very easy to assume, hell yeah, we're in a bear market. In fact, I would also argue we've gone nowhere for a year. So it's been a bear market for a year, especially for alts. Their 2025 for alts was destroyed. They had their bear market. The question is, will the alt bear market last longer than a year? That's for question number one. Number two, how far can we go down? Now, there's a couple of things that we see. On-chain data sucks. Not a lot of activity on-chain. If Metcalfe's law works, that's not a good thing. But the ETF flows drive the bus right now. It's all about the ETF flows and the DATs. The DATs have dried up. And if the ETF flows stop, retail's not in control. And if the ETF starts selling, we go down. And that 70K is very realistic. And the question is, how if we did hit 80K again, if we had a double bottom, that's bullish. If we break 80, as Mando believes is possible, we could go to 70 real quick. And then all the people, I know a lot of people that never, ever bought Bitcoin. And I told them, if you see 70K again, you buy. And they're ready with the finger on the trigger. And they won't be afraid this time. Who wants to take a stab at this story? Are we going to 50K? Are we going to break 80K? Could we hit 70K? Matt is scratching his head.
My number remains the same. I mean, when Trump was nominated, right, November 4th, 2024.
That's the floor. Yeah, historically.
That was the floor. And I believe it was market made to the all-time high. And they take back 50%. That's roughly 80,000. I think, to me, 80,000 is the number. And they're circling it right now. And it always accelerates towards the end. Just like this, it's very aggressive. So in my opinion, that's true. But I agree with you. I think if we come under 80,000 into the sevens, there'll be a lot of buyers, new money. Problem is, do they have liquidity? That's the liquidity problem. There is no money. Retail is broke. Credit card hits at 1.25 trillion. Nobody has money. So who has money? Is there cheap money from institutions? Possibly. Is there sovereign money? Possibly. But I think 80,000 is the level. If we break under 80,000, there will be a lot of action. in my opinion.
And there are theories. I'll throw this back at you, Marty, and then CTO. You can pull up a chart, and I'll go to you, Mando, last. But there are theories that we make an extension to 60K below the 70K if we don't get the double bottom at 80K. Now, I can't see that happening with QE happening, global money printing, rate cuts. I mean, it's a risk-on environment. We've never had a situation for Bitcoin when we've had all the macro pointing in the right direction and having a bear market. It doesn't jive. And I can point to 100 charts that show that we haven't had this before, but when there is QE, Bitcoin goes to the moon. I don't want to sound like a moon boy, but CTO, any thoughts on how low we could go based on your chart?
Yeah, so definitely there is a few things that we can say about that. Let's see. Let's bring up this one. So, I mean, who knows? It could turn here, but as Mando said before, catching knife is rarely successful. It's often more successful to wait for the turnaround to happen and then try to catch as much as possible of the uptrend instead, which means that you will get in a little bit later at higher levels. So, but that was the thinking with this wick here, because there is some level of possible support here. But I have to share this tab instead. Hang on, see if this is working. So all the previous cycles, when the uptrend has turned and has broken, we've always had quite big corrections. There has never been a correction less than, I think, 79%. It was 79% or 84% or 85%. Will we have that big correction now? I mean, it feels like it should be smaller when we have the institutions and all that stuff, unless something catastrophic happens, something with strategy or something like that. Otherwise, it feels like it should be smaller. And of course, it becomes pure guessing. I have no idea, guys, how long it's going to go. Say it goes 50% instead of 75, 80, 85%. And okay, that would be 63 then. If it would go 79%, I mean, this starts feeling unrealistic, guys, right? I would be very surprised if that happens. But can it go 50%? Probably. So my strategy is that I don't know how low it will go, and I hope that I can identify the turnaround. Like now, the trend is down, and then I'm very cautious. And when the trend turns up again, I'm hoping that we can identify it, that there will be a chance to catch the turnaround. If it becomes like a V-shaped recovery, that is very difficult. And I'm hoping that doesn't happen. I hope it becomes more like a controlled turnaround and that we can catch it. But right now, I'm trying to not have too much opinion about how low it can go, because I have no idea.
And your chart also tells us that we never really had a true bull market anyway, which means the 4-year cycle could be dead, which means people selling at the top of the 4-year cycle might be selling prematurely. But again, going back to the macro, Marty or Mando, I mean, global money printing, global rate cuts, it's good, no?
Yeah, look, it's very good. As you've said, it would be a very surprising turn of events to see this decorrelation continue, but it has, and it has for about 6 months now. And if anything, it feels like it's maybe even accelerating recently. So I don't know. I think that is probably the right question to see like where the lows would be. CTO has probably got a better sense of that. But I would guess 80K is the first one where we hit the March lows or April lows, which was, I think, was around 70, 75. And then I'd be looking at longer term trend following things like the 200-week moving average, which is around 55. So those would be like levels. But last time we did a bear, we kind of smashed through a lot of those sort of levels too. So it really depends. Like I've said on this show that I really feel as though those longer term correlations that Bitcoin's had, like Bitcoin's had a correlation to gold since 2013 and to global M2 since that long as well. These aren't nothing correlations. They've just broken down in more recently. So I would like to think that they would recouple, unless the only thing that would cause an extended bear would be like some pocket of leverage blowing up, which you tend to only find out where the leverage is after things start to sell off, particularly this cycle where I think it's less obvious. But the obvious things would be the DATs right now, but then there may be something else. Like we still don't really know which bodies floated to the water on the 10th of October. We may find out in 6 months that was somebody that we weren't kind of aware of. So sometimes like it comes out ex post. Yeah,
and that 1010 did a lot of damage to the space, broke a lot of people, made a lot of people lose faith. But still, the core asset, anybody that looks at where the world is going, where fiat is going, they're going to need some of this exposure. So,
I mean, if you
I'm
look
very
at
bullish on crypto long term, just to be very clear.
If you look at the Bitcoin wallets, I mean, BlackRock's still 777,000. Coinbase came down from 925,000 to 897,000 Bitcoin. So primarily, that's almost $100,000. 100,000 Bitcoin came out of Coinbase's wallet, custodian, which is probably ETFs. Binance has remained consistently the same. The US government hasn't sold. I think people just moved into stable coins thinking we're going into a bear market, and they're waiting for the right time, like CTO says. When is that? We don't know. It's hard to time the V-shaped flush. It's hard to time the bottom, but I think they're waiting, and I would expect them to wait till the end of the year.
I can maybe add one thing to that. I think that's exactly spot on, Marty, there. And I've had several like people with large trading portfolios write to me and tell the whole story, how they actually got liquidated on 10th of October. And these are people with experience since 2013. It's guys who were early in Bitcoin and has traded up very large portfolios, and they blew the entire portfolio that
You're
night.
kidding. Like we're talking 100
like
Bitcoin plus 1,000 Bitcoin.
Mm-hmm. Written like these long emails and talked about how it happened and how they, built up to that. And like if you traded since 2013, what is that? It's like 12, soon 13 years, and you have like large, we're talking like actually large portfolios here. And they woke up and it's liquidated, the entire freaking portfolio. And it's maybe they needed a couple of weeks, to get back to even open the computer and so on. But I've gotten quite a few of those emails. So I'm thinking, maybe if it could happen to them, maybe it could happen to some bigger players in the industry as well. Like you said, there could be bodies that haven't floated to shore yet here, that even bigger.
But the key thing there, first of all, that's shocking to think somebody has been trading Bitcoin for 13 years and they blow themselves up, which means they
I don't think it was Bitcoin. I don't think they got blown up on Bitcoin. I think that they had leverage on their altcoins and some Bitcoin as collateral, and then they had it like cross collateral, meaning that you can get the whole account wiped out, not just the individual trades. Yeah. So that's how it happened.
We see that they're probably on Hyperliquid too, because they do a lot of cross collateral there.
So here's an interesting transaction just happened. $2 billion of USDC was just sent from Binance's hot wallet to their cold wallet. So more evidence that this was just a liquidity grab on the derivative market. In
fact, that was my next point. But before I mention my next point, links for these legends are below all the channels. We're streaming all our channels, but Mando Minutes and CTO and his channel with 2 hours left. And of course, Marty Party, the nonstop 24/7 X Spaces guy. But for every winner, there's a loser. And this is the other thing. The question is, Mando, Marty, who is the winner? Binance, Wintermute. They've collected all these dead bodies. Now they're selling the organs. When are they going to come back? Or what are they going to do with all this cheddar?
That's the question. Who stands to benefit? Right. Who stands to benefit the most?
Yeah, it's a zero-sum game. So every time somebody gets liquidated, somebody's cashing in, you know? Weird. Anyway, that takes me to another interesting, well, end of 4-year cycle. You know, a 4-year cycle you could argue was 30, 45 days late than history. A lot of people think there might be mini cycles, there might be a 2-year cycle. We don't know till we see the money flow, and that, don't overcomplicate it. Watch the ETFs, watch the DATs. When that comes in, that's it. But retail cannot move the needle. It's too big an asset class right now.
Mm-hmm.
The other thing is kind of interesting. Hang on a second, a little bit out of order. This is another theory that came in, and I hear a lot of people talking about it, okay? And anybody in your network, you know people are losing their jobs. People are getting laid off. It's ugly out there, really ugly. All the data points, especially if you're white-collar technology. I know top people at Google and Meta that are like nearly vice president levels, they lost their jobs after being there for a decade plus, and they're stunned. But now, this is a weird twist. And I don't know if it's true or not, but people are looking at markets. Okay, they have wealth. They don't have a job. Now are they all going to become degens and start trading on their own account with Robinhood and other places, which brings about Robinhood as a potential opportunity because these younger generation people like to go there with their money and then start trading for a living. First of all, Marty, to you, you made a noise. Do you think these people who are laid off, and I had a call last night with somebody who called up and said, I've never traded before. I really want to get into trading. I'm worried about losing my job. This person worked at Google, by the way. Again, a senior person. Everybody is nervous, and everybody's saying, what am I going to do next? I know it's going to be hard to get another job, but should I just start trading with my wealth? Marty.
I don't suggest that. I don't suggest trading until there's market structure. Look, this time next year, there'll be a regulated market for crypto, just like stock and gold and other commodities. And we won't have this rampant artificial manipulation and artificial volatility, which is literally impossible to predict. The only way you can predict it is to basically wait until all traders get liquidated and then enter and try and extract your own liquidity. So it's extremely hard to trade right now. You have to flip the book. You can't use retail trading patterns. You can't use any theory you've ever learned. It's all traps. It's intended to trap traders. There's clearly a liquidity extraction going on. There's, like Amanda said, a perpetual futures market cycle, too many perpetual futures, no regulation, rampant manipulation. I would not recommend it, but I support that theory. Across the road, Fidelity closed their offices. My friends in the building, they managed the building, got fired. Like I said, I think we've been in a recession. We've been saying this for a while. We just haven't been told about it. I think it's a macro bottom, and you're going to see more of that. There's record layoffs. But what do people do trading? I wouldn't say trading.
Yeah, but remember, there's more to trading. It's not just all crypto. You can trade AI stocks, ETFs.
At all-time high, starting to trade. I mean, the only trade is short.
Yeah, the CTO, with in counterpoint to Marty, what he said, AI all-time high. Is there going to be a cap on the amount of knowledge that's required on the planet? The answer is no. There's no AI cap, I see. Do you?
Yeah, I don't see any cap either. I mean, AI skill will continue to accelerate. And while I do agree with Marty, like the crypto market now is extremely difficult. It's not a beginner-friendly market. But overall, if taking a step back, I 100%, James, just like you said. I mean, AI is not going to get any dumber. You can see like the cost of an AI token has dropped like, is it 1,000 times in 2 years?
44x in a year so far. 44x.
Yeah, exactly. So it's like it's accelerating. It's going to accelerate. Yeah. So unless you're a plumber or something, you have a service work which can't really be replaced until at least until Tesla's robots are in full production. But it's a little bit ahead. But like the knowledge work is happening right now. It's already happening. And I think there is only one thing that the AI can't really do, and that is to copy assets. Assets is a wider term. Like the most obvious form is a financial asset. So I think that everyone should be scared. I think it's good to be scared here a little bit. If you have a knowledge work, you come to your office, you sit in front of the computer and do something. That is being threatened. And it's not it won't help you to go into denial and think that it's probably not going to happen anytime soon. I think it will happen. I think that guy from Google is right. And I think everyone listening here, you have to learn building assets in one way or another. If you don't want to go, if you don't have a talent like being good at something with your hands, like plumbing or carpenter or something like that, which can't as easily be replaced. So I think that definitely take it seriously. Try to learn building assets. Marty's still right. Don't go and buy 100 altcoins today and hope that will make it, because it's a very risky market. But in a bigger perspective, definitely start learning building assets. 100%. Look, follow these three great gentlemen here. Try to build your skill and so on.
Yeah, Mando, over to you. There's this crazy stuff happening out there. There was just a paper written by Stanford. It's breaking people's brains. The unleashing of agents and AI agents. I just popped it up here. It's changing things very quickly. And the speed of change it's very difficult for humans to understand exponentiality, as I call it. But it's happening exponentially. S-curve. Everything. The cost is going to zero. And the adoption is going to the moon. What's your take? Degens, stay in cash, buy Bitcoin at 70K if it falls that low and just sit there? Or what would you say?
Yeah, I think it just means that the range of possible outcomes is increased a lot. And the pace of which we're getting to them is probably increased a lot. Like some people have very positive scenarios here where we solve all diseases and solve climate change and solve nuclear fusion and all these sort of things that would lead to a massive abundance of everything. And then there are more dystopian issues where it's everyone loses their job. Maybe we can't control the AIs. Maybe, I don't know where I stand on that right now. But what I do think is that everyone should consider what they do as a job, break down every single task that they do, and think about, is an AI going to replace that at some point? I think about for the stuff that I do. I do a daily newsletter, this show. People will be able to replace AI, and not just equal level. Some of this we're talking about much smarter versions of anything you'll be able to do for every single process that you do on a daily basis. So think about a world like that and what you want to do. There's not some simple answer to it, but I do think, I think I saw a piece today which says that all the major consultancy firms are getting smoked at the moment. Why would you ever pay for a research report from McKinsey these days?
I mentioned in the video.
Exactly. Absolutely.
There's one firm, 93% of their business came from the US government. And overnight, Doge killed them. And then the Accentures and the McKinseys and everybody else, they're literally writing papers about how AI can do so much stuff. And at the same time, having to let go a lot of people. It's shocking. And this was another one from Satya Nadella. He's the head of Microsoft. He said the future of work is macro delegation and micro steering. Instead of doing work, humans will assign tasks to agents and manage the exceptions through a new inbox. Again, profound craziness out there for the technologists in the house, Marty and CT.
I just want to add one thing, because it's so good discussion this, and just 1 minute on one thing that the AI can't replace, then it's Mando's financial assets. It can't replace that. It can also not replace easily, at least not easily replace Mando's audience. That's another asset. Another asset is trust. I come here, I'm looking forward to this show here today because I want to hear, Mando, your macro takes, James, Marty, your takes on the situation, because I trust you guys in that competence area. I don't want to hear ChatGPT's or Grok's opinion on the matter. I want to hear Mando and maybe James, your take on the Japanese yen situation, because I trust you guys when it comes to the macroeconomics. Marty, I want to hear your take on the manipulation situation. Is that and I trust you. So, and trust is another asset that is hard to replicate. So I do think that if looking around, there are different categories of assets, but it has to be an asset. If it's just competence that is replicable, and so yeah.
You're dead right there. This is so important because I've been saying.
I mean, definitely. I've said, have you seen that chart of ChatGPT's introduction versus tech jobs in Silicon Valley, right? Like literally, the technology industry has been completely demolished by AI. And that is, to me, the summary. Any job that requires mundane assembly of information and data, analyzing data, searching for records, searching for data, anything of that is going to get eliminated.
Yeah, there's a couple of quick things there as to how important this is. And I've been saying, become an asset allocator. Get those scarce hard assets again and again and again for years, because as AI drives the marginal cost of information towards zero, the relative value of irreproducible assets, gold, Bitcoin, etc., will go up, especially as wealth gets dispersed to the higher echelons that control this whole AI revolution. They will look to diversify and move into these hard, irreplaceable assets. And that's going to be so important. So in counter to what all you think, no, don't become a trader. But I think definitely if you have some wealth, don't keep it in cash. Don't keep it in index funds. Keep it where the big change is happening. What Google has done over the last 6 months is nothing short of astounding. The adoption of Grok and the capabilities are mind-blowing. And I don't think anybody is really ready for what's coming. So it is, I do stress, focus on your own bags, whatever wealth you have, position it very carefully. Yeah, crypto's a poop show right now, so be careful there. But other things, by the way, as CTO said, it was still very early. Let's wrap up in a couple of minutes. We've got 3 minutes left. Any quick questions out there from the audience? So there's one here. The commodities trade will unwind. This is interesting. Copper, Dr. Copper is getting expensive. That's required for the electrification of everything and all tied into AI. But the performance is weird. Mando, any insights on copper, Dr. Copper right now?
The commodities is a strange thing to say. Like, you could argue that if we see an unwinding of like the AI trade in general, that some of the more industrial like
bouncing
could be weak. But I do think that I agree with what you said. Hard assets should go higher. I'm very bullish still on gold and silver and platinum, all these sort of stuff. The trend is your friend for those.
Yeah, there's a funny one. Aim higher, become a roofer. I like that.
A little bit of a bounce going on here. Tether dominance just dropping quite fast. Bitcoin at 85.4. Just be also aware that this can reverse very fast when everyone starts to go back from stable coins back in. You get the FOMO rallies. So just be very wary today. This may happen.
Yeah. Any advice for people that kind of FOMO'd into Zcash late? Zcash went to 750 and then it got halved violently. Any thoughts?
Stop loss, guys. If you only learn one thing from today, it's to use some kind of stop loss. If you buy something and it doesn't go the way that you like,
pull up the Zcash chart there,
CTO. Don't hold it to zero. Absolutely.
I mean, this thing is just falling off a cliff. And I always say one of my key rules is don't chase, replace. When you see a crazy move like this.
Exactly. So this one was it looked really good up until last 1 week ago, approximately. It looked like this was an ascending triangle that was set to break out here, but then it rejected here instead. And now yesterday it broke down the lower range instead. So here, that was really the signal that this run took a different turn. And
Mandy, you said something, going real fast. You said something that the bloom has come off the rose for Zcash right now. There was a lot of talk that Bitcoin was weak because people were FOMOing into Zcash. You think that's no longer the case?
I mean, no one's talking about that right now. I think there was a lot of like, oh, this could be 10% of the value of Bitcoin. This could be, we're seeing OG Bitcoiners rotate. That did happen. There's no doubt. Like there were some Bitcoiners that bought Zcash, but now you've seen this very aggressive move down. I don't think that anyone could say that that's part of the reason that Bitcoin's moving lower. I do think that privacy is a narrative that will stay with us and be stronger and continue to be stronger for a while. So like Zcash, I think, is coming down from an absolutely parabolic move. Yeah. So, and parabolas often, when they break, particularly when the whole market's breaking, can be pretty violent. So I would just respect that. But if you like the story, I do think that Zcash is the winner of that privacy narrative. So
everything mean reverts. Exactly. And a good point here from Adam. Crypto won't disappear because blockchain technology is useful. Yes, the future is the tokenization of everything. Blockchain's not going away. This is just crappy thing. Another piece from AWH. This is a thesis I have believed in for a long time. AI is sucking up liquidity from Bitcoin. I know, like people CTO, big Bitcoin holders, they took some off the top and they diversified into things like Tesla. They were all in on Bitcoin and said, well, this is now dangerous for my progeny.
Two interesting things also that we saw the last few days. BlackRock announced that their IBIT is their largest source of revenue. Did you see that?
Yep.
Yeah, I mean, that's huge. So the use cases and the narratives of crypto have not changed. In fact, they're only stronger. The fundamentals have never been stronger. Also, did you see the universal basic income pilot in New York using stablecoin?
Yep, I heard about that.
That's the preview of what's coming. This will be the infrastructure and of backbone of the economy, of everything, taxation, income earning, everything. It's all just being prepared.
And this is a classic point here from Petro King 95 too. I always stress adoption is everything in crypto. If there's no adoption, no matter how good your chain is, you're toast. And Polkadot had the largest number of developers and the largest investments in developers for the longest time, but they built the wrong thing. Zero adoption. And I haven't seen the Polkadot chart in a long time, but that's a classic example. When it's a ghost chain, nothing will happen.
Well, they can sponsor a Formula One team as well. I mean, that's the money is going there. That would make me. That's just terrible.
Yeah,
I can show the Polkadot chart. It's quite funny. So it's literally a straight line down. This is 2022 over here, guys. So it's literally a exactly straight line. This is Polkadot to BTC, and here came this liquidation week, which.
Ouch. Oh, what a chart. Oh, my God.
And funny thing is, Polkadot actually sometimes has more users than Cardano. Pull up the Cardano chart.
Yeah. That's now we're getting into the real painful territory here.
Those charts are brutal.
Add a chart. We have it here. And that's not. This is also ADA to BTC. And the funny thing was that James, you and I talked about it back here in ages ago, many beautiful years ago, that this was when they had their big launch, when they added the smart contract functionality, when the big upgrade that was going to turn around Cardano. That was on the day over here. You can see for yourself, guys.
No, and Mando, you said it too. Alts got wrecked badly in the last 12 months, which again, not to share hopium or silver lining, but when they've been in a bear market for over a year and they have real use case, just look at, I think A16Z wrote a report on DPIN and how big that is. What's the DPIN chain? Solana. What is the chain that does all tokenization trading volume for stocks? Solana. The adoption is there. I think the volume for NVIDIA and Tesla trading on Solana right now is madness, and it's early. I think we just broke 360,000 people trading every day. These stocks, because they don't have access to centralized exchanges or traditional stock brokerages. So people in India and Indonesia and all these places, Brazil, they're using tokenized stocks. That'll be the kind of final topic. Any thought, Mando, on tokenized stocks or where we're going next as we sit here nervous?
I mean, just look at stablecoin and where it's been issued. That to me is the most important. Where stablecoin is getting issued to me is the future of the chains that will do the best. And that's Solana and Ethereum.
I think tokenized stocks is a real use case. I've said on this show, I think equity perps is a product that is very, very valuable and will be kind of a defining product market fit for some of these chains. It's kind of the whole point for Hyperliquid right now. I would slightly push back on the idea that like we've been in a bear market for just a year for some altcoins. Like
Hyperliquid
others,
and Zcash have done very well.
Yeah,
sure.
others index is where it was in 2021, January 2021. So we're in we're heading into a 5-year 0% return here for others. Yeah. You compare that. I mean, others doesn't have Bitcoin, it doesn't have ETH, it doesn't have Solana in it. So you could argue that like naturally you have the weakest coins there, but it's been brutal out there for altcoins.
Well, yeah, I mean, if you want some trading advice, if you are in those coins and you've been bleeding some, like Mando says, this is the time when you slide. This is the time when you move to these adopted chains right here at the lows. To me, that's the trade. Those Cardano, Polkadot, all of those, that liquidity should move right now.
Yeah, there's a quick question here. Do you think Solana will come back to 200? I absolutely do. Never sold a token. It's all staked, still sitting there. Because I look at the relative value of Solana versus other chains. I look at the adoption. I look at 60 different metrics. It's the cheapest chain out there. But I do want to say something, and correct me if I'm wrong here, guys. A week before breakpoint, it normally moves. Maybe this time is different.
Yeah, it's 10 days time, right? 10 days time.
It's even sooner. I think it's the 9th of December, 8th starts. But typically, that's when there's a lot of very good press releases, and they've been stacking them up for the last 4 to 6 months. And it's going to be in Emirates or Dubai. I always get confused where the location is.
Abu Dhabi.
But it could be a big show. That could be a little catalyst. I don't know. Thoughts, anybody?
I mean, typically, yes, we do run into that conference. I mean, that's when all the new breakthroughs are announced. That's all the partnerships are announced. So there's a lot of bullish energy. I think it's all interesting how it's timed when all the ETFs go live right before, and this capitulation event. So, yeah, it's going to be an interesting one. We could see a massive recovery or just low sentiment for the first time at a breakpoint. We'll see.
Yeah. And
actually, Solana is almost the only one that doesn't look really bad out of the charts. So I can show it quickly. So here is sold to BTC. The reason that I really like these BTC charts is that it eliminates a little bit of the Bitcoin price movement. You're just focusing on how the project as such is doing. The second reason it's useful is that a lot of big traders actually don't trade the SOL to USD chart. They trade the SOL to BTC chart. They trade between Bitcoin and an altcoin, not from the altcoin to dollar. So that's why sometimes the levels on both the support and resistance get much more reliable on the SOL to BTC chart. And Solana famously bounced again on the exact same level as it bounced many times before, and it is still holding.
Since 2023, I might add as well.
Exactly. So this exactly, James. So this is established already 2023. It's the same level today, and that's not a coincidence. It's not some magic level. It's because people remember the price levels they bought or sold at, and they're buying and selling it on this chart, not the USD chart. But even on the USD chart, it has been in a very tight range for 1.5 years, almost 2 years, and it hasn't really broken down yet, guys. You see it here, like this red line here. I'm not sure if the colors are clear, but this is 127. Okay, now it's 123. But I mean, if you just look at the picture, you see that it has stayed in this very tight range, and it has not materially broken down. Like you look at the other charts we just looked at for some other altcoins, this one does look different. You don't need to know anything. You can just see anyway that this one looks different than the other two altcoins charts I just showed. So there is, I think, out of the altcoins, Solana is definitely the one with who holds stable here in this rough market. And let's see if it could still bounce off these levels.
And one other piece, the SOL ETFs are pulling in average $35 million a day, which is substantial. Think of that in terms of how much retail investors can invest. Final question. Sorry for running long, everybody. Marty, people pester me to death. Ask Marty about Zeus. What should they do?
I mean, Zeus is building, guys. It's a startup. They're building right now. And
don't panic.
You know, until they finish building, you can't expect much. If you're an investor, you have a 4-year window. They're only 9 months old.
Yeah.
So,
awesome. I want to thank the links below for these legends. Watch wherever you want. Follow them. Brilliant.
I think the biggest mistake, James, the biggest mistake people make is when they hear about some small altcoin project, they go all in.
Yeah.
They must understand that these are like 0.1% of your portfolio. You should go in with 0.1% of your money.
Yeah.
You don't need to have a lot of these small caps.
It's so true, because risk management matters. And the number one component of risk management is allocations. Allocations matter. You put your money, the big chunks of your money, in the best risk rewards. Okay, that's the secret. And people always come in like they'll buy the top of something after a huge pump. Like they'll buy Zcash at 750 because it kept on going up. But they'll put everything in there. They've held. I know one person did this. They had a bag of Bitcoin since 2017, and they said, "Screw this Bitcoin," and they put it all into Zcash above 700 because it kept on going up. Now they've lost half. So you can't do that. It's so important, Marty. I'm glad we stressed that. Any thoughts on allocations and risk management, Mando, CTO?
Yeah.
Now is the time to be reducing positions. Like if you're catching a falling knife in anything, don't do it with your whole portfolio. So if anything, this is the time to be DCAing, because then you don't really worry about where the lowest price is. You worry about where the average price is. I think let's see if Bitcoin holds 80K. That's what I would say. And then I would work out what you want to do with your portfolio.
Exactly. If Bitcoin turns around at 80K and goes to 81K, that's a signal to make a big DCA. More than $100. So anyway, CTO, any final thoughts before we wrap?
No, I mean, it's easy to make money. It's harder to keep them in the market. So, I mean, everyone listening, try to practice capital preservations, things like stop loss. Don't go too big, too risky positions, so that one bad trade ruins their whole portfolio, like you just said, James, and Marty, you as well.
And like that email you got, like that long email you got, the guy from 2013.
Exactly. Don't take like those kind of risks that one bad luck ruins everything. You have to be able to survive that somehow. If there is icebergs in the water, maybe don't put full throttle on your ship.
That's so important you say that, because that's what Charlie Munger always said. Survive. Like words to this effect, I'm probably saying it could be wrong. I said the key is to survive. There will be icebergs, there will be black swans, there will be very nasty times in the market, but you need to position yourself so you can get to the other side. If you blow yourself up during one of these events, that's it. You're off the horse forever. Survive. That's the key word today. Thank you, gentlemen. Great show as usual. You guys take care of yourselves, and catch you next week.
Yeah, I think next week.
Thank you to the mods in the chat too. You rock.
We're at the bottom. Yeah, I think next week will be a bit more cheery.
Oh, don't curse us, Marty. Please don't curse us. Oh no.
See you next week, guys.
I'm gunning for the double bottom at 80K. That's a typical. That'll be a bullish sign if we bounce at 80 again. That's a signal for me. All right. Thank you, gentlemen.
I like that.
Take care of yourselves.
Thanks,
Bye.
Good show.
Thank you, everyone.